Hello, everybody. Welcome to JMac Investing. My name is Jason. Thanks for tuning in to another one. We have an executive interview here with a new SPAC that just hit the markets, Andretti Acquisition Corporation. We have Michael Andretti, the racing legend here, who is heading up this SPAC. Bill Sandbrook, also, who is a former CEO of U.S. Concrete. And then the CFO here is Matt Brown. If everyone doesn't mind, maybe take a minute and go around and just kind of introduce yourself and talk a little bit about why you gentlemen decided to go the SPAC route here of making an investment and rather than maybe say getting together and going in on some type of private investment.
Okay, well, I guess I'll take that. I'm Michael Andretti. I'm the owner of Andretti Autosport. I'm the one that sort of came up with the idea of the SPAC probably about a year, probably up to a year and a half ago now, I thought that seeing what was going on in the market with the SPACs, that especially in the sustainability side, I felt that we had a lot to offer. We have our brand, but also we have a lot of contacts within in that side of the world, and as well as a lot of technology that we've developed ourselves. Being involved in Formula E, which is an all electric series. It's actually the only sanctioned world championship electric series for open wheel cars. And so we've developed a lot of information that we know the space very well as a lot of contacts in the space. So I felt like we had a lot to offer in that space. And my first call was to Bill Sandbrook, who we grew up next to each other. We've known each other for over 50 years. Bill was my next door neighbor, and he became, he's a very good friend, but he also is very experienced in this space. I felt like he'd be the perfect partner, as well as, he's a guy that I know I can trust and will definitely do whatever he can to protect our brand. So it was sort of marriage made in heaven, I think. So that's where it all started with me on the SPAC.
Anybody else want to chime in, Bill?
Yeah, I'm Bill Sandbrook, as Michael had indicated. He and I grew up next door neighbors in Nazareth, Pennsylvania. And then he went off and won 42 IndyCar races. I went off in the Army and then became a businessman. And about 4 or 5 years ago, Michael and I entered a business relationship with each other, with U.S. Concrete sponsoring his son Marco's IndyCar. And then last year, I furthered that business relationship by going in with the co-ownership of an Extreme E team with him and Zach Brown and another one or two investors. So we've intersected now in business. We've known each other for 50 years. Most recently, I retired as CEO of U.S. Concrete, and I started there in 2011. And it was a public company on the NASDAQ, and it had gone through a bankruptcy, and the board brought me in to see if we could turn it around and make it into a real company. And to make a long story short, in January 1st, 2012, we were at about $2, and we sold the company to Vulcan Materials, another strategic public company, in August of last year for $74. So I'm very well versed in public companies, in corporate governance. And my first call when Michael signed me up for this is we needed a first-class CFO. And I called a former CFO of mine at U.S. Concrete, who together we probably did well over 20 acquisitions together. So we really know how to vet companies, negotiate, integrate, and create value after a merger. So I called Matt Brown, and I'll hand it over to Matt now.
Yeah, so thanks, Bill. So Bill and I worked together at U.S. Concrete, and we did a large number of acquisitions there. We also did a lot of capital markets transactions. And the time that I was there, we took the stock price from $6 to $48 through doing all those acquisitions. I know Bill took it from $2 before that to $74. So we did a lot of acquisitions and really did a lot of value creation through those acquisitions. So I jumped at the chance to work with Bill again and left the position I was at as a CFO at another company and joined the SPAC. So to me, it just made all the sense in the world, given my experience, Bill's experience, and partnering together with Michael and Mario in the SPAC with their brand and our public company experience. And then combined with that, just the macro trends you have going on now with electrification and ESG and all sorts of decarbonization and so forth that are really driving the growth of a lot of new emerging technologies, which are looking to SPAC or combine with a SPAC. So that's why it made sense to do this.
Yeah, absolutely. I've been covering the space and watching, a lot of these companies come public and choose the SPAC route. It's been very interesting to see a lot of the innovations and the technology that has been brought forward in a very rapid manner. But also looking at like in the racing, a lot of times I see that a lot of the technology is presented, a lot of the R&D is done in there's because there's more capital. So a lot of the R&D is done in racing and then brought forward to in the future. And it sounds like you got a good thing going with Michael and then Bill having the executive experience and Matt as well. I guess that will lead us into beyond you gentlemen. What does the board look like?
Yeah, we have Zach Brown, who is the chairman and CEO of McLaren Racing. We have Jim Keys, who is the current chairman of Wild Oats Marketplace and a former CEO of Blockbuster and the former global president of 7-Eleven. We have Cassandra Lee, who is the chief audit officer at AT&T. We have Jerry Putnam, who's the former COO of the New York Stock Exchange Euronext. And we have John Romanelli, a professional deal maker from formerly Bear Stearns and Credit Suisse First Boston. And then we have Michael's father, who's not on the board, but who is a special advisor to the SPAC and has offered up his services in any way to make this endeavor successful.
Very impressive board, lots of experience, and that's, I don't know if you guys have seen some of the bad actors in the space of as far as SPACs, but many of them didn't have the experience and or someone like Bill with the extensive CEO of a publicly traded company. Any thoughts on that, like what you've seen, and then how you guys are gonna hopefully not trip up on some of the things that trip some others up?
Sure. So after I left US Concrete, I went to a company called Forterra, which was a carve out. We took that company public. So I've done an IPO there as well. So I've got a lot of experience getting companies ready to go public and with controls, people, processes, and systems, getting public company ready, that type of thing. So that's something I can bring to bear when we look at a company that's looking to de-SPAC as to whether they're actually ready to go public or not. And then once we acquire them, helping them with all the things they need to do to be compliant and to deal with investors and things like that you have to do as a public company. So I think that experience is very important for us in making sure that things go well in the de-SPAC.
In your press release, you kind of touched on some areas of or different markets that you may potentially target. I know it's a SPAC and you can't talk about specific companies, but what of the target markets can you talk about those, like, and why those are kind of highlighted in the target you may potentially go after?
Sure. So we're looking at the whole mobility space, and that's a big space. It's over 4,000 companies and almost $3 trillion in total addressable value. So in terms of what that comprises, it's electrification, autonomy. So basically the emerging technologies that have been very popular with SPACs over the last couple of years. It also includes, this is very relevant to Andretti, but we would look at performance and luxury manufacturers or companies related to the performance and luxury market within automotive. And then we're also looking at more traditional sectors. So that would be things like aftermarket, service, and retail within automotive. So it's a pretty broad range. We're seeing a lot of emerging technologies companies in our pipeline. We've got over 40 companies we're looking at right now. And a lot of emerging technologies, some aftermarket and some more traditional. But we're going to look at each of those. They each have their merits. The emerging technologies might be higher growth, but they may be pre-revenue as well, which require more diligence and it's a little bit higher risk. So that's kind of the overview of the sectors we're looking at.
With these types of companies, like you said, the growth projections could be phenomenal, but it could be a long-term game. Is that the goal here with this? That this is going to be, you're going to be looking at a company that is going to be a potential good long-term play or investment for even shareholders to piggyback alongside with the target that you're going after?
Yeah, I'll take that. We put this SPAC and this board together to help through the life cycle of the process, from identifying the target to diligencing the target to negotiating the deal to closing the deal to having it ready to go public. But what we bring to the table that almost no other SPACs do is we're really focused on adding post de-SPACing value to that company through one or the combination of the Andretti brand, the network of automotive connections that Michael and Mario bring to the table. And as you said a little bit earlier in the broadcast, to use Michael's racing assets to potentially test and vet new technologies prior to commercialization. So we're definitely there for the long haul to create value for the de-SPACed company that pure financial SPACs really can't provide after they consummate their deal.
Very interesting. Yeah, me and Michael were talking before, and he's sort of he's got a long-term investment into racing with his father, himself, now his son. And I was asking him, is there anyone else in the pipeline? And so, but so it seems like that there is a long-term lens on what you got going here. So it's going to be interesting to follow and track. So anyone else want to shed any color on what's going on as far as what's the process look like as far as are you guys gonna be super busy vetting companies, or are you going to take a little slower approach? What's the approach that you're going to be taking going forward in the vetting process?
Well, as you're aware, there's a limited time frame to get the deal done with a SPAC. For us, it's 18 months, and then we can pay some money in 24 months potentially. But regardless, we're going to go very quickly. We're going to go quickly, but we're going to be very diligent. We have a lot of experience doing this. Bill and I are used to doing 5 or 6 acquisitions every year, and that's while we're also running companies, operating companies. So now we're focused just on doing one deal. So we're looking at really narrowing down a large number of companies through diligence into a smaller number, and then doing even more analysis on those to pick the one we're going to run with. So we are running quickly. Usually from the time you announce a deal to the time you can close the deal is going to be 3 or 4 months. And there's work that goes in before you even announce, putting together the financing and all before you announce. So there's a lot of work to be done. So we're going to move very quickly, but be very diligent as we go forward.
Thing to say is that we've, when we announced our SPAC last year, we got a lot of inquiries from a lot of companies, and actually I think we're up to about 40 companies that have actually approached us. So we haven't had to go out and try to find the companies. I mean, we are still going to be looking as well on our own, but I think out of 40, I think there's a good 5 to 10 that really look interesting. So I think that helped that we had that. I think that gets us going a little quicker, to have that many to start vetting right out of the box.
Absolutely. I know at one point there was it seemed like 50, 100 SPACs a week were coming, and that it's slowed way down. So I'm sure that the market's probably a little bit riper right now as far as companies that are available and looking. So it'll be interesting to see. And I know that's what the audience here, everyone, because we had a pre-meeting about this interview, and that's what I was telling you gents, that people really look, because you can't really do research on the company of a target that a SPAC acquires until they announce it. So the information gap is there for investors, so people are just yearning and waiting for every SPAC, that especially one that's interesting like this. So we'll all be very much anticipating the announcement, so looking forward to that. So so I'll geek out a little bit as a fan here with you, Michael, and I'm in a collector of collectibles and things, and just watching the increase in the fandom of Formula One and IndyCar racing has been pretty cool. So how do you see that as far as through you obviously being right in the middle of it? How have you seen the growth of Formula One?
Well, I think the growth of Formula One in the United States especially is, I think a lot of it has to do with the Netflix show that they have. I think it's really created a lot of interest and a lot of popularity for Formula One, and I think it's been pretty exciting. I think there's a lot of drama in that series, and I think they're really able to capture it all in the Drive to Win, I think it's called. And so I think that's been very good for it. But auto racing in general, surprisingly, has just taken off in the last year or so. A lot of interest, in IndyCar. There's a lot of interest where we feel like we're definitely on the upswing. And so, things are good right now in our industry.
Well, gents, I don't want to make this interview too long, and any other thoughts or any other things that we maybe did not capture thus far that any one of you want to cover here today?
Well, yeah, just one thing. Michael alluded to it. They built this brand, the Andretti brand. I mean, it's not just a family name; it's a brand, and it's worldwide recognized. 75% of Americans are familiar with the Andretti name. And, they would not have put their name right on the SPAC as Andretti Acquisition Corp if there was any fear or any trepidation that we wouldn't be successful. And thus, we came up with the ticker symbol WNNR, which is a shortened form of winner. And that's exactly what we plan to do with this SPAC.
That's strong there. I like that. And as you can see down, scrolling across the bottom, that's the company name, Andretti Acquisition Corporation, ticker symbol WNNR, and then for the units, it's WNNRU. So the units, I think it's a half a warrant with the units. Is that correct, Matt?
That's correct.
And then they'll eventually break off, and you can also just buy warrants eventually. So, well, gentlemen, this has been great. And like I said, I'll be definitely anticipating and looking forward to the announcement. And maybe once they're post announcement, maybe we can have you back on and we can maybe interview the CEO of that company.
That'd be great.
All right. Thank you.
That'd be great.
Great. Thanks,
Okay.
Jason.
Thank you very much. Thanks.
Thank you, gentlemen, for coming on. Have a great rest of your day.
Okay.
Bye.